Hey everybody, Jordan here. Let's call it trading. Hope y'all are doing good. I'm going to give it a few minutes, as always, just in case anybody needs a couple minutes to join in. As of right now, we have nobody, so I'll be waiting. Give it about 15 minutes, maybe max. Nobody joins in. Hey, I'll just go ahead and end it. And if a couple people join in, then a couple people will get their answers to their questions, and we'll be good to go. Oh, I see I got a few people in already. Okay, cool. All right, so um, I'm just kind of watching, seeing what's going on. Let me explain what I'm looking at. So I am looking at NQ1, right? NASDAQ 100 E-mini futures. This is the opening candle for today, basically. Now, obviously, I went and did a whole bunch of zooming in. All right, so this is what it really looks like. All right, so don't be disoriented, but I zoom in so that I can see this, because I will explain why I have this drawn. So we drew the VWAP, which is right here, right? Click it, clicked on our opening candle. I like the 7-minute a little bit more than the 5-minute now, just a little more accurate in my opinion. And as you can see, we formed what are called tweezer tops here. Two basically candles that are almost the exact same size with wicks on the top part. That makes them tweezer tops. And then we kind of just been hovering right around VWAP, so I really wouldn't get in anything quite yet because we keep kind of bouncing up and off, up and off. But here we have an inside candle, right? On the 5-minute, we had it earlier, but here we have an inside candle. Boom, boom. So here's a break to the downside on that we could potentially use or have used for a put right here. And don't be confused. This is actually quite a bit of money in terms of futures. This is about, so let me see, about 55.41 to 537. That's like $400 or $500 on a contract right there. I take that back. It's about 300. So you would have definitely made your money there. And you're very welcome, Chuck. I really enjoy doing this. This is something that I like to do, and it doesn't take away from me to share this with you guys. Like, you knowing it and being successful doesn't take away anything from me, so I'm happy to share that with you. I want you to be successful too. I don't want to be the only person out here that learned something that we should have been taught in school, to be honest with you. So let's see, just taking a look again. We just keep kind of bouncing right off of VWAP here. So it looks like VWAP is going to be a real strong pressure point. You're going to want to see something go minimum break here. So before I get in any calls, I want to see it break this area, just because this seems to be also another resistance point based off of this initial bounce down on the day. Okay. And in terms of puts, you can keep continuing getting puts off the bounce, right? But let's wait. We want to wait a little bit. And I'm waiting for a few more people to join. I'm giving maybe like 5 more minutes, but I have something that I'm going to go over today. Basically, kind of the journey of becoming a successful trader, kind of what you need to do, in my opinion, what I think you should do to become a successful trader, because this is what I know is successful. This is what I know, how I know to become successful. And I'm happy you're here, Barry. Please, I know you just recently joined the Discord group, so I'm happy that you're still joining these, because you don't necessarily need them anymore because you have the group. But I'm really happy that you're here. And we're just kind of looking at this, right? Like this is very choppy, so we don't really want to get in anything quite yet. This is very choppy, but something to be noted is that the VWAP is acting as major resistance, and it seems to be having a very hard time staying above or breaking above it. So this shows me that we're probably going to have a big pop down, continue down, at least steady. Or if we finally break through VWAP, what's going to happen is we're going to start heading towards this 200-day EMA and potentially have a bounce and break down there. So yeah, I'm just going to wait a couple more minutes, and then I'm going to get into my kind of, I guess my, if you want to call it like little diagram, cheat sheet, whatever I think you should do to become a successful trader, in my opinion, how you get there. And feel free to take screenshots. I'm gonna record this, and sorry about my son in the background, but I'm gonna record this and put it up on the YouTube channel. So don't worry about not catching a particular thing. We'll make sure that you get it eventually. So don't worry about it. And again, apologies for my son being crazy in the background. He's having a good time. He goes to bed in a couple hours, so. Question. When you get into a trade, do you immediately place another order for 15 or 20% for profits? Okay, so the first part of that, yes, I immediately go and put my sell order in for 15%. Okay? And I put it in for 80% of my position. So if I get 10 contracts, I'm going to sell 8 of them at 15%. And then I'm going to be manually looking for my stop. My stop loss. So I have my order in for my profit take, and I'm watching the stock closely and seeing, hey, this is my area where I said, hey, if this is where it gets to here, it's probably not going to go my way, and I'm going to get out. Does that make sense? Because basically, I feel like I answered your question. No, you can't put in 2 orders at the same time, at least not on like Webull or anything like that. But what you can do is you can, like once you hit a certain, like your first, say for example, your first win, you can put in a trailing stop loss of say like 5% or 10%. And then from there, if say it never hits and it keeps going up, you can just then say, hey, I want to sell it right here, and then just cancel that and put in your sell order and sell it. Does that make sense? Cool. All right, so we got about 10, 11 people in here. It's been about 10 minutes. I'm gonna go ahead and get started, like for real now. And what I want to talk about is this. So, in my opinion, what is the journey to becoming a successful trader? For me, that is figuring out an industry you're interested in and know that you can put the time in researching on. So for me, that's the tech sector. That's what I'm interested in, right? SPY, QQQ, AMD, IWM, NVDA, right? That's what it is for me. That's what you're going to want. You're going to want to find something that goes into your actual interest, right? And then from there, you're going to pick 5 stocks in that industry or sector that dominate, which is why I pick these two, and are relatively stable, right? Again, SPY and QQQ, but they fluctuate a few dollars or percent a day on average. But you also need them to be affordable for you to play with your size account. So if you can't play QQQ, right? This is why I say you should play SQQQ and TQQQ, right? So once you've picked your 5 stocks that are affordable for you and fit this criteria, right? They're relatively stable, they fluctuate, etc. Okay? Now it's time to master a strategy that works consistently with these stocks. And luckily for you guys, you're already ahead of figuring out a strategy because you have this VWAP 200-day strategy along with understanding how inside candles work, right? So since this is broken, we're going to go ahead and delete this now because we don't need that. And understanding how this works, right? And now what you need to do, and this is the important part, is practice on paper. You don't need to trade. You don't need to trade yet. What you need to do is you need to get decent with understanding how it works. Okay, so paper trading, or what we call creating a trading journal, which can be anything from just an Excel sheet to a literal paper journal, whatever it is. And what you're going to do is you're going to write where you would have entered and why. Okay, what made you enter? And then you're going to write down where you exited and why. And then note, was it a win or a loss? Okay? If a loss, you need to further note, was it at any point green? Was it a win? And why did you not take it? Like how green was it? Okay? Because if you can say, hey, look, if you can see consistently, hey, you know, I let a win turn into a loss and it consistently got to about 10% and then turned around, maybe you can realize my percent take at 15, 20, 25% is not realistic to make me consistent. Maybe I need to just take my money at 10%. And then lo and behold, because you've been honest with yourself, and you've actually decided to act upon those things that you told yourself you were lacking or screwing up on, you've seen that there's a common mistake and you fixed it, and now you're extremely consistent on paper, and it's time to start trading for real. Because instead of going 5 or 6 on your trades, you're going 8, 9, 7, right, out of 10 on your trades. So you're being very consistent, and you know that you can make some money. What you're not going to do is you're not going to start trading options right away. Okay, that's not what you're going to do. You're going to start trading shares, and the reason is because that's going to mitigate your risk. It's also going to make you very consistent in taking low profits and also cutting at low losses. All right, this is going to keep you very tight, so that you don't look for those 20, 30, 40% wins. You're just looking for 5, 10, 15%. And you're just consistently building your portfolio up. All right? And what you're going to do is you're going to pick the shares, and you're going to try and just make 1, 2, maybe 3% per play on these shares. Okay? It isn't a bunch of money, and it isn't to make a lot of money. The point is to build your confidence and show yourself that you do indeed know what you're doing. Okay? For a small account interested in tech, I recommend trading SQQQ and TQQQ. The reason is because it makes it very simple, because one is the inverse of the other, and I will show you, as I've shown y'all a few times, as TQQQ goes up or down, SQQQ does the exact opposite. Okay? So, with that being said, is during this time on TQQQ, you would own SQQQ shares. And then right when you see your exit point here, because you got an inside candle and it broke down or whatever happened, right? You would sell this and buy this, and you'd make your money there. And then reverse, and so on and so forth, okay? So this is the one that I do. But then as your confidence gets built up, you need to be studying relentlessly on what exactly options are and how Greeks interact with one another to move a contract up or down. That's going to be your theta, your delta, and your gamma, okay? We have a video of that on TikTok. Super easy. It's one of my pinned videos. Just watch it. It explains it. Simple enough where you can understand it, and also that if you don't, it kind of gives you a foundation enough where if you start reading more detailed explanations on how they work, you actually kind of understand what the hell they're talking about. Okay. So now that you've done that, you can you've been trading your shares for maybe 1 to 4 months, and you're being super consistent, taking your 1 to 2% right on your plays. You feel extremely comfortable with how options work because you understand what Greeks are, how they work, and all that jazz, right? You can start lightly playing options based off of the strategy, which is the VWAP and 200-day EMA. So let's go back up here, right? And as we talked about, we're not really trying to trade yet because it just kind of is chopping up. It just kind of keeps hitting VWAP and bouncing very, very lightly. We're waiting for a nice confirmation, right? So with that strategy, you're being consistent and you're comfortable. So you're going to start buying 1 to 3 option contracts at a time at most, more than 20% of your portfolio on any given trade to mitigate blowing it up. Because you're new at it, you don't want to risk too much. I honestly recommend 15% starting out, just to keep you tight, okay? And you'll learn very quickly that options are a whole different ballgame when it comes to profits and losses. But having played shares with tight loss and tight win rates, this prepared you to be disciplined to small wins. The turtle wins the race in this game every single time when it comes to trading, okay? Every single time. I can promise you, if you're the guy that takes 5 or 10% wins, you will become much richer, much faster than the guy who tries to get 30%. Because you're going to win 8, 9, 10, half, okay? And so you're going to just be way more consistent. So that compound works in your favor. That compounding interest works in your favor. And when you lose, since you only risk this much, it's not a big hurt. Whereas when this guy loses, he's trying to make 30%, so he might let his shit go 50% down before he actually cuts it. And he finally realizes it's a real big L, okay? So trust me when I say that this is going to be the biggest lesson that you learn. The turtle wins the race. The small amounts is where you're going to win if you start taking this. Long story short, you're going to find 5 stocks or less in an industry you can be interested in. Master one strategy. It doesn't have to be this one, right? It doesn't have to be this one. But you need to find a strategy that you understand, that works for you, and that you can grasp, that works for the stocks that you want to play. Then use it, master it, okay? That's what you want to do. Practice, 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 and then be very conservative and consistent with your wins and losses once you actually start trading. If you keep it super tight and you only take setups that your strategy shows you on those stocks that you play, you will come out a very successful trader within your first year. But I promise you, if you deviate your plan or your strategy, you'll be one of those many people who quit, blame the market, saying it, because every loss is like your own fault. I almost guarantee it. It's your own fault. If you have a strategy that you know works and you master it, like this one, almost 99% of your losses are because of you. Because you weren't happy with your 10 or 15%. You thought I could get 20, 25, or 30, and then immediately it turned around and you were like, ooh, I think it'll come back, I think it'll bounce, and then it goes, phew, and it goes the complete opposite way. And then you're sitting there twiddling your thumbs, pissed, okay? Don't be that guy, all right? So without further ado, let's actually look and see what's going on and see what happened with QQQ, so we can do some practice, This was QQQ. This is, let's see where we close. Don't want, okay. Don't want to look anything after we closed. Okay, there we go. All right, so this is where we opened. Now, two things we notice right off the bat. VWAP and 200-day EMA are right on top of each other. They're literally, they're hugging, okay? Anything in this area, in from here, I wouldn't touch. Going up, mostly I wouldn't trust. I wouldn't trust it until it broke here or here. And why is that? Because, again, VWAP and 200-day EMA are right on top of each other, forming massive resistance on this upwards area. Because remember, we've been traveling down. We've been traveling down. So that means that there's massive resistance, because we broke under here. There's going to be massive resistance going back up now. I don't trust any of this shit. I don't trust any of this yet either. This is the candle I start going, okay. Why? It's strong. This was a, let's see, 308 to 30. This was a $2 candle downwards. Okay? This is where I would potentially start looking for my puts. I'd start looking for an entry. So I'm looking here. I see this green candle. I don't get in yet. I see this weak candle. I don't get in yet. This candle, I get in. This is strong. This is strong. So I see this. I say, okay, set my range because it's a strong candle. Now, when I break under here, this candle, I'm going to enter puts. Lo and behold, we break under, I'm going to enter my puts. From here to here is over $1 move. Okay? So with the way that I work, the way that I get my strike, which is within $5, and usually a day trade, I'm getting it probably $2 or $3 away. I'm gonna get it 7 days out. So this was Friday. I got it for the 10th, right? That was my expiration date, was the 10th. So so this entry point, so about here is where I'm gonna exit. I'm gonna exit somewhere from right in here is where I'm exiting. Now, what happens is, here in this candle goes down and bounces, and then we form an inside candle. Form inside candles. What actually happens is you get a point here where it breaks below, and this is because I want to be transparent. We actually get a point here where it breaks below, and you would have entered puts, and you would have got fucked. But this break back up here, you still use this range, okay? You still use this range because it's still the same candle, okay? It's still the same candle. So you exit your puts for your stop loss that you know, which for me, because this previous candle is right here, is going to be here. So for me, this is here. I'm exiting and I'm waiting for an entry. And then I see calls. We break up. I'm getting in my calls. From here to anywhere in this area, I'm out. Okay? I'm out. No ifs, ands, or buts. I'm out. I hit my target, I'm good. I'm not revenge trading. I'm not trying to make this money back that I lost from here to here. I don't care that happened. I'm not revenge trading. That's how you end up losing money. Yes, I will talk about, this is kind of part of it. So exiting is more so of a personal matter, but for me, what I do is if I'm going to enter on this, if this is going to be the candle that breaks, right? Broke down, right? So my stop loss for me is the previous candle's high. This is my stop loss now. This is now my stop loss, okay? Now we break down maybe like 10 cents here. So that would have been like 2% gains that then reverses back and goes back on me about 15 to 20%. So I would have lost 15 to 20%, which is actually the area that I'm comfortable losing anyway. I'm willing to gain 15 or 20% to lose 15 or 20%, right? So this is a good area to exit. And then here, since this is still the same candle and this is still the same inside candle range, we break up. I'm going to enter my calls. And then all this means is if we break underneath here again, I'm going to get out. That's my stop loss because this was the previous candle and this is the one that I entered my calls on. So this is now my stop loss. And to be honest with you, right? 9 times out of 10, these setups, these inside candle setups, they work like butter. So this I've had maybe 2 or 3 instances over the last maybe 25 or 30 trades where an inside candle did break like this and then reversed back and was a trick, right? Same thing with like a strong move off of VWAP and 200-day EMA. That's happened maybe once where I went the wrong way because of that. And so to continue speaking, I want to, because I have something I want to talk about here. So we get in our calls and we're waiting. We're waiting for another play. We see this candle go above VWAP. Now, if you're risky, you enter on the immediate break. On me personally, I'm waiting for the next candle. And I don't want to get in any calls because I see that the 200-day EMA is right here. So there's just too much resistance. I'm waiting for another point to show me that we're going down. And I actually get that right here. Why? Because of this. This is a tweezer top formation. These 2 wicks, candles, tops are about the same height, tweezer tops. Plus, the next candle then breaks through the VWAP. So I'm extremely confident here I'm going to get in immediately on this break underneath. As a matter of fact, I remember this play. I got in at the very end of the start of this candle. I got in here. I got in right here because this was a tweezer top. I know exactly what that is. I know we're going down. I got in. We broke through. On this one candle, I was able to make my money and get out. Okay? Again, we're waiting for an entry. We're waiting for an entry. Hit VWAP, tweezer tops form. Entry found. This candle, get in. We actually form a bear flag here. So this is a point, and this is what I really want to talk about, where average down is important. Where when you see this, you average down. So you got in here, right here, and from here to here probably was not quite enough to make your win, okay? But then you see this happen. You start going towards VWAP. Well, if you know there's this double resistance here. You know that the VWAP has been acting very strong as a bounce point, right? I'm confident enough to average down right here. I'm confident enough to average down here. I averaged down, and I know I did, and on this candle I got out with wins. And these are the opposite of tweezer tops. These are tweezer bottoms. You can get in calls here on this candle, on the break above this wick, and get out here, here, either one, right? And then, because that's the end of the day. Oh, I'm on the 7-minute, boss. So 5 minutes is gonna be right here. So even on the 5-minute even looks even more so, right? Tweezer tops here, bounce right off of VWAP. Tweezer tops here, breakthrough. Weak, and instead of tweezer bottoms here, you get 2 really weak candles signaling or reversing. And in this scenario, your inside candle's right here, but you still do get that moment where it does break below and screws you, but then you get a better entry on your call. So that's the difference there. But yeah, I was on the 7 minute. This is what I was on. So I found that the 7 minute is just a little more accurate and not faking me out most of the time. Because like even this part right here, right? If I didn't even put the inside candles, this is obviously a major support zone. I wouldn't even, if I hadn't done the inside candle break thing, I wouldn't have gotten in the put even on that breakdown. I would have been waiting for a break up here or a candle that was at least this far below. Personally, that's what I should have done. But I didn't. I relied on the inside candle method. I'm using Heikin-Ashi candles. So you go over here, Heikin-Ashi. You can use regular. I mean, it's not really. It's nothing. I guess I was using regular. Usually I use Heikin-Ashi. I guess I updated or refreshed it and didn't realize it. But I usually use Heikin-Ashi. They're better, in my opinion. They're a little bit crisper and cleaner to read. Does anyone have questions? I want to answer y'all's questions. I don't want to just ramble and talk about stuff that y'all don't know, already know. I want to answer your questions. So talk to me. Literally anything. So as of now, so what we're seeing here is we're seeing an attempt to break up out of VWAP, but again, I wouldn't enter any calls until this point, and I would exit probably right in here, because of the fact that the 200-day EMA is right here, forming another resistance point. Inside candles, yes. So an inside candle, we can still use this as an example because this is actually good right here. So an inside candle is when the previous candle, high or low, is not broken by the current candle. So what I mean by the current candle would be, say this is your current candle, or it just passed, okay? Now you just started on this candle, right? This candle never broke the high or the low candle, right? So you're gonna draw a range of the high point and the low point, and what you're looking for is a break below this point or above this point. Immediately when it breaks below or above, you're going to buy your calls or your puts, depending on which one it is, right? At this point, you buy your puts. And this is a like $15 drop, which futures, that's a lot of money in futures. You'd have been out. So now then we see another inside candle, it looks like, right there. And this one ends up breaking both ways for about $5 up and $5 or $6 down. Inside candles are meant to be quick scalps. Very, very quick scalps. Very, 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 very quick scalps. They're not meant to be, when I do inside candles, I'm mainly looking for about 10%. 5 or 10%. I'm not looking for 15, 20, 25. I'm looking for 5 or 10%. I'm trying to get in and out within literally seconds. I've been in and gone to put in my sell order, and when I press sell, it's already sold. I've done that plenty of times. There's a particular VWAP indicator is over here. Okay. These are just trend lines that I'm drawing. These are not part of the strategy in terms of like I'm just drawing those. So this is my 200-day EMA and this is my VWAP. I've just zoomed in a lot. Okay. This is what it This is what your chart probably looks like on the 7 minute or whatever. It probably looks something like this. Okay. So VWAP should look like that, and then you're gonna go here, you're gonna make it look like this, screenshot this. And then you're gonna make it look like this. You're gonna take off your lower and upper and your background. You're just gonna take that off and make your VWAP whatever color sticks out to you. For me, that's yellow. Okay? That's literally it. If the only reason yours probably looks crazy is because you have your lower, upper, and background on. And my 200-day EMA is the Williams alligator. So this right here, star it, click it. You go to indicators, type in Williams alligator, click it and star it. Go here, go here. Make sure that your inputs are 9, 21, and 200 for these right here. All right. And then you're going to do jaw and teeth off, lips on. Now you can keep your jaw and teeth on because, and I can show you here a little bit better, when VWAP crosses your 9 EM day, and for me my 9 is pink, while my 21 is white. When a VWAP crosses above or below 9, so above signals calls, so right here, right here, you could have gotten a call, or below, well, actually, I never even got below, so you would have just got your calls there at one time and then not done anything with the 9, but you can use the 9 EMA as another point for entry. And also, without using like VWAP or whatever, this was the very first strategy that I ever used, was just 9-day EMA, 21-day EMA, and 200-day EMA crosses. So when the 9 EMA crosses below the 21-day EMA, you get inputs. And if it goes above, you get in calls, and you use the 200-day EMA as a bounce zone and major break / resistance zone like we already do. So again, here, right, this might even be simpler for some of you. You get in puts. This whole time you would have been in calls from right here. You would have gotten in calls. Right here you would have gotten in puts. It might have fucked you up, but you would have known that this is a bounce zone, so you might not have gotten in them. You would have waited. But yeah, this. But I personally, I like the VWAP one now, so I use that. Take those off. Do my anchored VWAP from 8 there, and that's it. Yeah, the 921 is a great strategy. It's the very first one that I used. It's how I got consistent. No, I'm doing it as soon as it breaks. If you're gonna use inside candle breaks as an entry, you need to get in immediately with a 10% profit take. Okay, they're quick, immediate buy and sells. You might literally get in and out in the same like second. I've bought something and then turned around and put my sell order in for, say I bought it for $100 and I immediately turned around and put it in for 110. Well, guess what? It sold for 115 because I have limit orders, right? And I've had that happen a lot. So you need to be quick. Like, that what is it? That Allstate, or what is it? State Farm commercial? You need to be quicker than that. If you can't be quick with it, don't do inside candle breaks unless you're going to do the inside candle breaks, which are great for big moves, which we need to talk. So let's talk about that. Let's talk about it. This is a decent little inside candle break. So this would be a daily. These are daily. Okay, so this means this is one day, this is the next 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 day. Okay, so let's look at these. There's going to be a couple instances where we get to see. So I'm going to start here. So when you see an inside candle day happen, what you're going to do is you're going to be waiting. You're going to look and you're going to know that this day is going to be a pretty volatile day. And you're going to know that not necessarily to get in calls or puts based off of the break of the candle, but know that this day is going to be huge because you have created an inside candle. And if you look, 298 to 305, that's a pretty big day, ain't it? Again, inside candle. Formed. This day is 91, 282. That's a $10 day. And then again, the very following day ends up becoming, oh, I lied, not an inside candle. Let's see if another, this one actually just formed one, right, on Friday. So Monday should be a very big day. Whichever way it is, it's going to be a big day. So we need to be ready for that. Inside candles on day are a little bit more, I definitely like looking at them on days. They help me figure out, hey, is today going to be worth playing or should I just sit it out? Because if I have some shit to do, I might just sit it out. But inside candles on days are very, very good to say, hey, look, I need to maybe set aside the first couple hours of my day and the last power hour to really be on here and make sure that I'm taking advantage of this big day, right? But 100%, if you have, if you want another simple strategy to look at, this 9 and 21 day plus the 200 is a great one to use, guys. This is the very first one that I started with, and it was wonderful. On a daily, this is one that you can use for like long trades, right? I would recommend using more like for longer trades, maybe like the let me get a little bit more of this in here. Like this one, the 30-minute or even 15-minute is okay. But let's look at the 7-minute and let's see what it looks like. Good Lord. Let me just do this. Let's make it a lot easier. Okay. All right. So let's look at this. I mean, again, my pink line is my 21-day EMA. I mean, my 9-day EMA, I apologize. While my white is my 21, and this is my 200. Okay? And just as before, the 200-day is going to be the exact same thing. It acts as a major bounce and resistance zone. Or if it breaks, it's a big move. Okay? And so what you don't do is you don't get in on crosses that are right on the 200-day, right? So this right here, you don't get in. You wouldn't get in this. You'd be getting in this because this is well off. You would get in this because this is well, and you would get out and then and be, this is plenty of money, right? So again, don't get in this. You get in this. And it doesn't work 100%. It probably works and the reason why I fine-tuned it and I ended up getting into the one that I'm using now, which is just the 2 and the VWAP, is because that worked about 6 or 7 out of 10 times, while the VWAP about 9 out of 10 on my plays. Okay, so this is why I switched over, but this one is a very good one, especially if you're kind of new and adding all these indicators all the time is seeming to get like you just don't get it. You can't understand what's going on with the VWAP or whatever, and you don't know how to add in your little trend lines for your inside day candles. You don't want to do all that shit. Well, the 21-day, 9-day EMA, and the 200-day is a good way to start, and have a decent win rate if that's what you want. For me, this is even better because I know what I'm doing now. So again, let's look at what we did, why we did it. Did not get anything here on this break up because we know this is a double resistance area. Huge resistance. We're looking for a major candle down or a major candle up followed by another candle that breaks that high or breaks that low. Okay. So for us, if we were going to get in calls, this is the high we needed to break, and this was the low we needed to break because this is a strong candle right here. Okay? We break that low, we get in our puts, we're out well before this area. We see this weak, and I say this a lot, a weak ass candle. After tweezer bottoms, we see a weak ass go up. We can get in calls here till we break this high, which is here, get in calls, have a couple instances to average down, or maybe you exit with a loss because you have a tight stop loss, and that's okay. Get out, see your tweezer tops, signaling your downward movement, get in on this candle, ride it, get out. Again, tweezer tops, ride it down, and you're done for the day. Does anyone have any more questions? Looks like we finally broke through VWAP here. So this would be, again, for me, what we were just talking about. This is the high I want to break to even remotely think about getting in calls. This is the high I need to break to get in calls. So we got too much to go. Still not even close. This is strong as a bounce zone, even when they break, it hasn't been able to hold. We also have this extra resistance here with the 200-day. So I don't trust it. I'm waiting. Do I ever use price action? I've just found that this is just the best way to do it for me. So I'm not going to say no, because yes, I have, but and yes, I do, but I found that when I get from this, I lose. The only other things that I will really use, and be successful with, is options flow, using the options flow and seeing hey, look, there's a lot of volume, or volume versus OI on a contract. That is very successful. Also, something simple that I talk about, this would be a good one to talk about now, actually, because we can talk about this and you'll see what I'm talking about. Whenever you see a stock fly, AMC did, right? Flew to $72, short squeezed. You see this, right? Magnificent rise all the way up from 95 cents to 170. Now, for me, anywhere in here, I would have just immediately bought. Why? Because a lot of these things move, a lot of these things that pop like this, that go 100% or plus, they pop off of nothing. Unless you see real news that gives it the reason to pop, it's going to go down. It's going to retrace at least 20%. So what I would do, and this is what I do, about the 50 range, I got puts for $1. And I just averaged down. All the way up to here, I got puts to $1. And then lo and behold, we dropped to $1.10. And from here to here, when I tell you this is like I got out here, right? Because this is the 200-day EMA. I know it's a bounce zone. From here, from that 40 cent drop right there was like a 70% gain. It was everything, you know what I'm saying? So instead of trying to make, find something here and then get this random pop up, this for sure popped down, I got in. Versus trying to find this random pop up. I got in the for sure back down. And we can, let's use this as an example, right? This is where this is what everybody wanted. But you know how much more money people made from here? Right? Do you get what I'm saying? Beach bum. If you're trading on 1 hour, does not matter ever you do it on the day. Do it the opening day candle. If you're day trading. If you're going to do it from like the week, I recommend doing it on Monday and keeping it from Monday through Friday and then redoing it on Monday and again, right? And then if you're trying to do for the month, then yes, do it on the month. But what I would also say do is if you're trying to do it on the month, also add in the ones for the week as they go on, and you'll notice that those zones also act as bounce zones. So the month will act as a bounce zone, while the weeks, every single week VWAP will also act as a bounce zone. Does that make sense? It tends to happen on larger time frames. The more that you get on a larger time frame, like if you get on instead of the 1 hour, you got on the 4 hour, would actually be even better. For what you're probably saying you want to do, the 4 hour is probably even better for you. I would say try it on the 4 hour and see, and like back test it, right? Like take a look and see, hey, I usually get a contract for X amount of time. Would this match my time frame, and would it move in the direction, like does it show me what I need to see to get in my, if it's 4 hour, I think is the one that that's the one that you're looking for versus the 1 hour if you put it on the month, the start of the month. I mean, does anyone else have any questions? I see we got about almost 20 people, 15, 20 people in here, so we keep kind of fluctuating. I want everybody to ask whatever you guys need to ask. I want to answer everything. I probably will do this for maybe another 15, 20 minutes, and I want to make sure all of you are, answered, happy, feel like you were heard, and, good to go. Oh, and something I want to talk about, I guess until one of you do ask a question. Oh, never mind. Could you kindly show another example of stop loss for another 200 EMA VWAP trade, or how I decide? Yeah, sure. So let's look at a different stock, right? Let's say I want to trade IWM. I trade IWM. Let's get our VWAP. On the wrong thing. What am I doing? All right, let me get my stuff going. All right. So, had I entered calls here, right? Had I entered calls here, my exit in terms of this trade would be at VWAP, because the underneath my candle is below VWAP. I'm going to enter puts if I cross below VWAP. So for this example, if I was to enter calls, right, I would say, we opened here, I got in my puts, I made my money on puts, right? Again, my stop is VWAP, but I made my money because we went from here to here. That's plenty of money, right? Now we have a strong candle above. I get in my calls. I either make my money or I start declining right here. I'm out. Now we have a stronger candle. We've broken below. Again, still my stop loss is at V. Enter put. So if this is the case, if I entered here, right, and I didn't take money here, or if this candle didn't go like this and then like that, and it went like that and then like that, I exited at this cross and I just got back in at the next cross, right? It doesn't matter if how much I lost and how much, like, you know what I'm saying? Like, I'm entering at the crosses and I'm exiting at the cross. And then here, okay, boom, this cross, we're good. This is, we've already made our money. Now this looks to be, right? So we break this range right here. So if this is the candle that we're entering in, this is the top that we'll exit at. If we break this top, we'll exit. We don't break that top till here, and we make plenty money on this candle here. We almost hit it, we almost break it here, but we don't break it. So does that help a little bit? Because basically, if you're entering right on a VWAP break, your exit should be VWAP. Like, if that's your stop, like, that's your stop loss. Unless you've hit your money and you hold, you know, your 80%, then your trailing stop loss should be 5 or 10%, right? So then when you go, you're still up 5%, right? You exit, or at even, you exit, and you still manage to secure your money. And so what I wanted to talk about that I wasn't talking about yet was VIX. Using the volatility for QQQ and SPY is extremely slept on, guys. As VIX goes up, as volatility goes up, QQQ, SPY, NQ1, etc. goes down. As volatility goes down, these go up. Okay? They're kind of an inverse. They're not a direct inverse in the sense that, like, the charts look exactly the same but opposite. But what I can say is that they are like in general the same, right? So look, this went up, we went down, right? So in a general sense, it's the same. It's not exact, but it's general sense the same. So what you can use this for is, say you see your 200-day EMA here. You know this is a bounce zone, right? You see it's been acting as a bounce zone. So then you know volatility is going to go down. You are in calls, and you can average down on calls. And then as you see the volatility go down, you know that soon, very soon, QQQ will catch up, or SPY will catch up and reverse and do what it needs to do. This is a very good tool if you don't have VIX added in to your watch list to help you with this. You're hurting yourself. You were hurting yourself. As you can see, they are very similar, but opposite. Not exact, but very very similar. So trust me when I say you want to use this. Is there any, like, while I have you guys here, is there anybody that wants me to look at a specific stock potentially and, like, tell you my thoughts on it? I haven't really done that, but if any of you want me to do that, I'm happy to do that for, like, the last 15 minutes or so. And of course, I'll be honest, like, if I don't know what the fuck I'm looking at, I'm gonna tell you I don't know what I'm looking at, or I don't play it, and so this is all conjecture or whatever. But if it's a tech stock, I can definitely, like, I got you. Oh yeah, I will look at Apple. I'm gonna answer option new real quick. So if you are interested in learning from us daily, we do have a Discord group, and of course don't feel obligated to join anybody else in here. I'm just sharing the link for him or her because they asked. But you can join the group, and we do like live call outs. We do you know, a live trading session like this every day. My partner Logan, who's actually an even better teacher than I am by far, he does live trading daily. He lets you know in advance if he can't be on or if he needs to get off for a few minutes. And he, yeah, it's a real good place to learn if you're looking to continue learning on a daily basis. So let me look at then Baba, then Tesla. So where's my Apple? There we go. Okay, so Apple, in my opinion, just like all of tech, should continue down. We have the 200-day EMA here. We are actually in a falling wedge, so we're probably gonna go up to rise, and a falling wedge is, let me share a picture with you guys in the chat. Give me a second. Show you what it looks like. To share pictures in the chat. Okay, well, can you see that or no? Damn. Okay. I can't share it in the chat, but a falling wedge is basically when you see something fall and then start to kind of, actually this is not a falling wedge. Let me see. I need to zoom in a little bit more. Sorry. This is actually a rising wedge. That is funny. I called it a falling wedge at first because we fell, and normally a it could be either. Damn it, this is tough. I'm gonna revert back to my original thinking. I think it's still a falling wedge because it does still technically kind of look a little bit like a bull flag. So basically what happens is you fall and you go up and then you down and you kind of trend down slightly. And then what's going to happen here, and I'm going to draw exactly what I think is going to happen. So trend line. Have our trend line. Okay? So what's going to happen is we're going to go boom, boom, boom. And once you break here, we're gonna pop up to our 200-day EMA and potentially slightly over. So this is what I think is gonna happen probably tomorrow. This is what's gonna happen. We're gonna right up. Okay, this is what I think is gonna happen because we're in a wedge. Baba is kind of this one's a tough cookie, bro. So. This also seems to be in a falling wedge, and we'll probably have something similar to like this right here pop up, so something like that. But there's two reasons why I think Baba could potentially pop up. China stimulus coming out, and they're kind of reopening, you know, a lot of shit back up. And they're like I said, the stimulus is gonna do exactly what ours did for us is gonna do for their stocks, right? So their stock should pop up, but since it is an American market stock, it's gonna suffer along with the American market. So I don't know how much it can pop up. Like this could literally have been, this could have been it. You know what I mean? I want to say that this basically what you're gonna be looking for is this. You're going to want to set this as your range. And wait for a break. And if it breaks up, you're going to want to wait depending on how, so like here, right? And you break here, you can use this range to make some money on some calls. But if it's like here, I would just wait for the bounce or the breakthrough. That's what I would do with Baba. And Tesla is just gonna get fucked, bro. I don't even have to look at that shit. Tesla's done for. Elon is talking about shutting down stuff and this, that, and the other. His whole thing with Twitter has been a ridiculous debacle. It is in a falling wedge, so it'll probably rise to the 200-day EMA, but that's not really anything because it's 200, and this previous VWAP that I have drawn is probably going to shit itself right down. So Tesla, I would personally, what I would say is if you get 50 for like, I don't know, maybe like August, I want to say, you'll be solid. Like those things will pop off. If you can afford that, cool. If not, like $500 would still be good, bro. As far as Apple goes on Monday, what I would do personally is I would get some calls for like 148 ish, and I would do it like as far out as I can afford to, so theta doesn't smack me, and get one that has the Greeks to where, you know, delta and gamma work to where as it moves X amount, I'm actually getting my percent that I want, and I would exit around here, bro, like 147 ish, 147 right here. And then Baba, that's the one that I really don't want to give too much advice on, man. I just don't. Their stimulus check thing is what's throwing it off. Because normally what I would say is, yeah, this is gonna go here, and then somewhere in this area it'll pop up and go to meet the 200-day EMA. But that could literally, like, their stimulus check could literally, you could open up at $100 on Monday. We could open up at $100 on Tuesday. You know, I don't want to say anything. I really, to be 100% honest with you, I fucking hate Chinese stocks. They're the worst things to play with. Do not touch them. And that's my advice. Do not mess with them. I have gotten clapped more times than I can remember on Chinese stocks. They're so volatile. They don't do anything you think they're gonna do. I would just recommend don't mess with them. There's so many other things. Like if you want to play a cheap tech stock, get ChargePoint. Look at ChargePoint. You can play ChargePoint all, and the flow on ChargePoint is super like believable. Every time you see a big flow come in for puts, it works out in your favor. Big flow for calls came in right before their earnings, and that shit dropped and then flew. I mean, this is a good one to actually, like, if you really like options flow and you don't really know, like, you want to use options flow to your advantage, this is a great one to do. And it's cheap. You can trade shares of it, make a few percent, a couple percent on it every time you trade it or whatever, and just play it. Does anyone else have any questions? If not, I'll probably end this here soon, in a couple minutes. I think I've gone over everything that we should go over today. I want to take a look back at the futures and show you again how the reason why I didn't trust this cross above the VWAP yet is because, as you can see, we're just chopping. It's not really, this extra resistance here is making it really hard to say, let's do this. So. Everybody good? Any questions? Biggest word of advice for today, though, is do not switch strategies often. Find a strategy, master it, stick with it. If it stops working for you for a certain short amount of time, that's okay. Just stop trading for a short amount of time, and then paper trade, and when it starts working again, you're good to go. Also, you can always adjust your strategy to work for the time that you're in and continue to revert, because I can tell you now, this one is very versatile in the sense that it works in a bull market, a bear market, it does not really matter. But either or. It only works really good on one or the other, and you need to tweak it for the opposite. This one, not so much. It's good for... So this is why I like telling y'all about it and showing you this one in the 9 and 21 day one as well, because they're very reliable and regardless of the market that you're in. And I'm happy to do this stuff. I'm happy to share it with you guys. I just want to make sure that those of you that do take the time to join and like want to learn, that you're actually learning the stuff that you need to learn and that you want to learn. So if you have questions, please don't hesitate to ask them. This is why I put this time aside for you, so that I can answer them for you. Y'all are very welcome. I mean, like I said, I wish that I had a teacher like this when I was, in high school, college, whatever. I don't care how old you are. It's never too late to learn this stuff. I just wish someone would have taught me it, and I had to learn it all on my own, and it was hard. It cost me a lot of money learning on my own, in the sense that I lost a lot of money trying to learn. And I want to be that person that kind of like, you do off my wisdom, not off of what I, you don't have to learn the hard way. You can go off my wisdom and be better than I am, right? So if nobody has any other questions, oh, here we go. Do you always go by the 1 day, 5 minute, 200 day EMA, 200 day EMA? So I'm personally using more now the 7 minute time frame. If you look right here, right, I'm on the 7 minute. I started out when I make videos. I've only used 7 minute for maybe the last 2 weeks, maybe week and a half. And I mean, like, look, it's not very much different, right? It's hardly different, but it's different enough where I feel that the 7 minute is slightly more accurate. So I'm using the 7 minute, but I am using the 200 day EMA as my resistance point. The only difference, and you'll notice this, is when I put extended hours on versus regular trading hours. You see where your 200 day is on you? This is something you need to be well aware of. And you need to also toggle it on and off throughout your day, because if you notice, right, look at this bounce. It's pretty fucking close to your 200 day EMA, is it not? So something to be aware of. You need to toggle it. I would say toggle back and forth. Like literally you just have to do this. Just this. Just look and go back every 10 minutes. So every 2 candles, just take a look. But you definitely want to make sure that you're taking a look at regular trading hours versus extended trading hours consistently, because your 200 day EMA will change. It might not necessarily flip like how this one did, but it will be in 2 different spots. And your VWAP may also kind of move slightly as well. And you're very welcome. So I feel like that's a good spot to end it at, guys. I am going to end it here. I post the video on YouTube immediately after. It might take like a few hours, but this video will be posted on YouTube right after this. It just needs to upload itself. And, I appreciate you guys showing up and asking questions and wanting to learn. And I'll be here again next Sunday, same time, 6 p.m. Central, to do this again. And I'll have another little set training session of things that I want to talk about and go over with you to help you be better and help you grow. and then we'll look at, you know, how things went the previous week, etc., so that you can be successful. And y'all are very welcome. I love doing this, so I'm going to continue to do it. Like I've said before, you know, yes, I do have a Discord group. I do have all this stuff, blah, 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 that you can join, but don't feel obligated. I'm going to continue to do free stuff on TikTok and on here every day and every week, all right? There's no obligation to join that. That's like, if you really want to support and you really want to join and get our call outs, right? You don't need to do that. I'm not asking you to, and I'm not begging you to. So the only thing I do ask you is that if you do like these Twitch streams and you do like the TikTok, please, you know, tell your friends to take a look and join up so they can learn as well, because I want the free stuff to reach as many people as possible. I want the free stuff to actually really get out there and help people. That's what this stuff is. So love you guys. I'll see y'all next week, or, you know, you see one of my videos on TikTok tomorrow when I make one. I'll see you tomorrow. You have a great weekend, rest of your Sunday, and I hope you have a great week, and we're going to make some bank together all week, right? Let's do this. See y'all later.